Jim Rogers was a Wall Street legend long before he wrote his first book, Investment Biker. In the 1970s, he made what he describes as more money than I knew existed in the world, managing the Quantum Fund with George Soros. Since retiring at age 37, he has invested his own funds, been a finance professor at Columbia University, hosted television programs on WCBS and CNBC, and written several more bestsellers, including Hot Commodities, Adventure Capitalist, and Street Smarts. Time has called Rogers the Indiana Jones of finance after he completed a 116-country, 152,000-mile overland trip, setting a Guinness World Record as he talked to businessmen, bankers, investors, and local citizens to get a better sense of each country's infrastructure and investment possibilities. Jim is a regular contributor to Worth magazine and a business correspondent for Fox News and CNBC. His forecasts are featured in Barron's, Fortune, The Wall Street Journal, and the Financial Times. Jim called in from Singapore to talk with Porter, and this is what they had to say.
Jim Rogers, thank you so much for joining us today on the podcast. I'm so grateful to have you here. And if I can, for just a minute, I want to peel back the hands of time. I want to go back. This is a personal mission for me. I want to go back to the late 1990s in New Orleans in the United States. You were just setting up your commodity funds, your index funds. You were first really communicating about how bullish you were about commodities, and you ran into me. I was a 25 or 26-year-old assistant analyst, and I knew nothing and nobody. And yet we sat down and had dinner together, and you gave me some of the most important life lessons I've ever learned. And my question for you is, do you have any recollection of that at all?
You know, Porter, every once in a while I get something right, and I said, this kid's got it. Whatever it is. And I will tell you what I remember was there was a complicated mind. There was, even though you didn't know as much as some other people did, I knew you were curious and complicated, and that you were going to figure it out one way or the other. I wish I had gotten other things as right as I've gotten you.
That is so
women,
kind.
for instance. I wish I was good at women as I was with you.
Well, that is a mystery, Jim. And you know, with a publication dedicated to the markets, I think I chose the easier of the two subjects: women or money.
Yes, absolutely. I couldn't agree more. I've certainly been a little bit better with money than I have with many. Well, I got a good woman now, but certainly made plenty of mistakes.
And listen, we're going to get to some things that benefit our subscribers in just a second, I promise. But you guys have to all understand with me what it is a tremendous honor to speak with a legend like Jim. One other story, Jim, I want to run by you. I was speaking with Jim Grant the other day, and he told me a story about you, and I just wanted to verify it with a source, as a good journalist would. Jim Grant says that you were essentially the first subscriber to his newsletter back in 1983. Do you have any memory of that?
No, absolutely. I remember it extremely, extremely well. He told me he was going to start a newsletter. I said, I will be your first subscriber, and I'll even invest in you. And I will tell you, I gave him a check. I don't know if he remembers this. I gave him a check, and he didn't cash it. He put it on the wall in a frame. He was pleased to show it that he had an investor and that I was the first investor. But later, things started going bad, and he had to cash the check. He was running out of money. So he took it out of the frame and cashed the check. He called me and said, listen, I got to cash the check. I said, okay. Anyway, he cashed the check, but he's a lot smarter than I am. He's a lot more successful than I am. He's a very, very good guy.
You're very kind. You're too humble. So one last personal question before we get to the heart of things going on. And I feel certain you won't answer this question, but I, as a good journalist, I feel an obligation to ask. And that is, your former partner, George Soros, recently gave away the remaining bulk of his fortune to his foundation. And in a sense, that means he's really finally retired. And I wonder, has there been any kind of reconciliation between the two of you? At this stage in your life, have you guys had a conversation? Have you had a lunch together? Has there been any kind of rapprochement?
Well, George has got to be, let's see, he's 87 now, soon to be 88. No, I have not seen nor spoken to him in, I don't know, 37 years. You might as well ask me about my first wife. I mean, I don't know what he's up to. I know occasionally I read about him in the press, but no, I haven't seen or spoken to him in a long, long time. You know, Porter, I can remember people in my life with whom I was extremely close. There were guys when I was in college that I was with, 10 times a day. And some of them I haven't seen or spoken to since. These things happen. People go their separate ways. And, maybe it's not good, but I look back over my life and literally there are people. One of my guys that I was unbelievably close to when I was in college, I found out the other day he had died. And I didn't even know it. So these things happen.
I know they do, Jim, and it's absolutely none of my business whatsoever. I just know that in terms of the financial circles and the people that have an interest in the financial things, that the two of you together were one of the greatest success stories in the history of the financial markets. And again, it's absolutely none of my business, but I hope for the both of you that that conversation will happen. I think it's kind of like the Beatles getting together and sharing a reproachment somewhat, but it's none of my business. And I just wanted to ask because I know a lot of people have interest in it. But let's get into the stuff that the people are.
Let me just say, I'd much rather see the Beatles.
Well, I'm not surprised, Jim. Anyways, I just want to say, again, that's a question that I think everyone listening just is curious about, and I appreciate you answering it honestly. And let's just move on. So Jim, listen, the things that people follow you for and that you're really recognized for is your financial acumen, of course. And I just wondered, I heard an interview with you about 6 months ago that was on the internet. It was broadcast everywhere from Business Insider. And you were talking about the biggest bear market of your lifetime, the biggest stock decline ever. Are you still on the track of that? Do you think that we're heading towards a real financial calamity?
Well, Porter, what I said was, and I'll say it again to be sure it's clear, we have always had financial problems in the markets in America or any country you want to pick since the beginning of the Republic, and we will have more. And I said that the next one is going to be the worst in my lifetime because there's so much debt. In 2008, Porter, you remember what happened. That was because of too much debt. But now, Porter, the debt is much, much, much higher, as you well know. So the next one, when it comes, is going to be the worst we've ever seen. Now, I hasten to tell you that Janet Yellen, who's head of the central bank in America, says, no, we're never going to have financial problems again. So if you believe Janet Yellen and the American Central Bank, you should stop listening to me right now. But my view is that when the next one comes, it's going to be a doozy.
I happen to agree with you, Jim, and no surprise, you've followed my work over the years. And one of the things I note is that the nature of the debt has changed. Back, let's say 10 years ago, the debt was really focused in consumer mortgages. And today, the debt is really focused in consumer loans and sovereign debt. Does the nature of the borrowing raise your concerns or lessen your concerns?
No, it raises my concerns. Let's just say, and it's not just sovereign debt, as you well know. You know better than most. But that makes it even worse because when you start having governments fail, oh, my gosh, who's going to bail us out then? You? We're all going to call you, Porter, for you to bail us out. But when you start seeing governments fail around the world, boy, that's when you're going to have serious, serious trauma in many countries and many markets. You're going to have governments fail. You might even have countries fail when the governments themselves cannot step up and bail people out.
Do you think, Jim, it's reasonable to expect that Japan might be the first society that we see go through this type of metamorphosis?
Now, that's an extremely good question. Japan has staggering debt, as we all know. They have a declining population and debt that's going through the roof. And Mr. Abe says he's going to do whatever it takes. He'll print as much money as it takes, and he'll spend as much money as it takes. That cannot last. Now, it never occurred to me that it might start in Japan, but Japan is certainly going to be a big problem. By the way, I own Japanese shares, and I'm buying more Japanese shares today, just so you know. But if I were a 10-year-old Japanese, I would get myself an AK-47, or I would leave, because in his lifetime or her lifetime, that place is going to be a disaster.
Very interesting. I want to move on to the virtual, the crypto assets, cryptocurrencies, and I wonder if you have any opinion at all whether you should own some Bitcoin or own some other crypto assets. Have you looked into this new asset class? Do you think it's all a fiction of the credit bubble, or do you think there's something more to it?
Well, I hasten to tell you, Paul, I have never bought nor sold any cryptocurrency. I wish I had. I'd be as rich as you if I bought Bitcoin back.
Jim, hey, by the way, that's not fair, because in the very first time I interviewed you, I asked you about your net worth, and you refused to answer. So no snide comments about my net worth.
Well, I'm sure you're wealthier than I am. Smart as you are, you got to be. Anyway,
that's ridiculous.
Let's go to something else. I never bought any of them or sold any of them. As I look at them now, I read that there are 2,000 cryptocurrencies here in the last couple of years, months anyway, and that if you look at the charts, many of them have gone straight up. Now, if I didn't tell you that was cryptocurrency, if I just said those are some kind of securities, you would say, especially you with your knowledge and experience, you would say, well, that's a bubble. Whatever that is, it's a bubble. And then especially if I showed you that some of them have already gone to zero in the last few weeks or few months. So I don't know. I know it sounds like, feels like, smells like a bubble developing. Does not mean it won't be successful. There was a huge bubble in the internet in the late 90s. You've heard of Amazon. There's some companies that have done extremely well, even though that was a bubble and even though it collapsed. So don't think it doesn't mean that there won't be successes. I don't know. It's my basic answer to you.
I think that's a great answer, Jim. I don't think really – I haven't really heard an answer that's different than that from someone whom I really respect and I feel like is knowledgeable about the space. But there is one thing I think I would just share with you, because I think you have a curious mind too. And please understand, I'm not trying to sell you on crypto. I have no particular interest in crypto, and I don't care one way or the other what you decide. But are you familiar with the work of Coase, the old Chicago professor of finance and business, for lack of a better word? I'm not quite sure what he actually taught. Have you ever heard of Coase's theorem?
I read your stuff, and I know you've got a young guy who's very knowledgeable and optimistic about cryptocurrencies. Is this the same?
No. This really has nothing to do with Thomas Churchhouse. You probably know Peter Churchhouse's father, and they're an old Asian finance family, and that's great. And I respect what Tom has done. He's on the board of a couple of different of these companies, and he's very plugged in. But my interest in them is actually not financial. It's theoretical. Anyways, Robert Coase at the University of Chicago back in 1937, and then again in the early 50s, he published a series of papers that he actually won a Nobel Prize for later. I'm pretty sure in 1991. But the point is, he envisioned a day where property rights would become so certain and transaction costs could fall so low that the essential purpose of the firm or of the corporation or of the limited liability company or whatever could disappear. And what's interested me so much, and I just wanted to point in this direction, is this idea that you can have a functioning organization that does not have an owner per se is being exhibited by a lot of these new public domain software companies. So that no one owns the software. Instead, you own a token that allows you to use the software. And it's a very different kind of model. And I know you're a curious mind, and I just wanted to throw this out there for you to look into if you're curious, because this is potentially a whole new type of commerce. And by the way, Jim, I understand exactly how crazy that sounds. That's exactly bubble speak, and I'm very aware of that, and I'm very aware of the size of the credit excesses and how much free money is sloshing around. And I think the idea that nobody owns the corporation, but people have rights to use the software, it could be the dumbest idea in the history of capitalism. But it's out there right now, and it seems to be working. One of the one of the crypto asset companies that has been organized this way is called EOS. And EOS, believe it or not, has sold $500 million worth of these tokens to use their software. That's a pretty big IPO.
Well, as you know, Porter, in the history of the world, in the history of capitalism, the crazier the idea, the more likely it is to succeed someday. So just because something sounds crazy, that doesn't put me off. That actually interests me. It rouses my curiosity even more. I don't know enough to comment on this particular situation, but I will certainly, when we hang up, I'll start to look.
I'd be really interested, because I respect you so much as a thinker. I'll follow up with an email about this stuff, and I'll point you into a couple links, and I just love your take on it. And it's a very interesting thing in my mind, because there's been so much capital that's been put into these new kind of electronic networks. And as you've seen Amazon take advantage of it in terms of retail space, and I've taken advantage of it as a publisher, I feel like there's a lot more that the internet's going to do for us. And I think we're still in the early stages of that. And I just want to go on the record as saying I'm not saying that anyone should buy an EOS token, and I'm not saying that anyone should buy Bitcoin. I'm just saying that it is a very interesting time where there is a lot of potential that's being unlocked in this technology, and how it will all unfold is still very much unknown. But a big part of it is going to be what government's going to get behind it and sanction it. And I think that Asia is ahead of the rest of the world in that regard. Jim, have you seen anything in Singapore or in your travels in Asia? I mean, nobody travels as much in China as that I know as you do. Have you seen any of this crypto stuff in storefronts or in your travels in Asia?
Yes, I've actually seen restaurants who take some of the local cryptocurrencies. I don't know if they still do, but certainly a few months, let's say in the summer. In the summer, I saw restaurants and shops that had signs saying we take X, whatever X currency happened to be. So I've seen it. I've also, but to your bigger point, or I'll try to make a point, the computer, the internet is already changed everything we know. You are right. It's staggering. It's beyond certainly most people's imagination, including mine, of what's going to happen. My children will never go to a bank or a post office or maybe even to a doctor in their lifetimes when they're adults, that is. Because everything is changing. We know the world has a money problem of various sorts. We know that everything has been changed by the computer and will be. So, yes, the computer and the internet are going to change money as we know it. If you go to China right now, Porter, people don't have money. It's astonishing to me. They buy a cup of coffee, they put their phone on the thing, and there's a cup of coffee. It's paid for. And they look at me pretty funny when I say, I have some cash I want to pay you. They say, we don't want to take cash. You know, cash is not efficient. And as you know, governments don't like cash because A, it's expensive, and B, if they can't control you as much if you use cash. But if you have everything on your computer, then the government will call you up one day and say, oh, Mr. Rogers, you've been drinking too much coffee recently. You know, they'll know everything you do and where you do it. So governments like to get rid of cash. Everybody's going to get rid of cash. So it's all going to happen. It's all going to be on the internet. How it evolves, I'm not smart enough. I'll have to read your publications.
Jim, you're kind and wicked all in the same breath. A man I greatly admire. Well,
by the way, I want to just quickly say we both should talk about this for a second. Two or three other things could happen. One, governments could issue their own cryptocurrency. They could control it that way because governments don't like any of this. They don't like gold for that reason. They want to be able to control everything you and I do, and they want to know everything.
And by the way, I was interrupt very quickly. China appears to be headed in that direction. They have outlawed all of the other ICOs, and they appear to be in the process of handing down a set of rules that will require all cryptocurrencies to be trackable.
Okay, well, as I say, we have to watch what governments do because governments don't like you and me. They like to have all the power themselves. But the other thing, of course, is that if, God forbid, there should ever be some kind of disaster and there's no more internet, even temporarily, what are you going to do? You go in your refrigerator and you bring out your tomatoes and you can swap them or eat them. But after that, you don't have any internet. worldwide or even regional wide, you don't have any money. But in that case, I would certainly have a little silver and gold or a few bags of sugar or something in the closet, because barter is going to be the only way you'll survive.
So, Jim, I'm happy to tell you personally, I just made my largest gold coin investment ever last week. I called someone who you may know, I don't know if you do or not, but his name is Van Simmons. He's a coin dealer on the West Coast, and he invented PCGS, the professional coin grading system. And I asked Van, I just said, hey, listen, outside of bullion coins, what's the lowest premium over spot? And he said, circulated St. Gaudens and circulated Liberties. And I said, send me X amount. And I don't want to tell you X amount because, the IRS might be listening. But I made a very large commitment to gold coins, because I actually believe what you just said. I think that sooner or later the governments are going to crack down on virtual currencies, and the anonymity will be lost, in which case all of the drug dealers and money launderers are going to be stuck. And I feel like they're eventually going to go to gold, because that's how humanity's done it for, as you know, probably about 4,000 years. So I feel very comfortable buying these high-quality coins that have no premium over spot. And I'm not making anyone a recommendation. I'm just telling you what I did with some cash that I had. But I wondered, Jim, what's your position on gold currently? Have you been selling gold or buying gold, or neither?
Neither at the moment. I own a lot of gold and silver. I haven't bought any serious gold in a few years. I'm waiting for gold to go down more, at which point I hope I'm smart enough to buy a lot more gold, because before this is over, gold is going to go up a lot. It's going to get very overpriced. It might even turn into a bubble. I hope it doesn't turn into a bubble, because then I'll have to sell. And I don't want to ever sell my gold. I want my children to have my gold someday. But no, I am a potential buyer. I have never sold any. I don't expect to sell any gold unless and until it becomes a bubble someday.
And Jim, I have a question for you, another question about tactical investing. When we met in 1998, you told a very young and impressionable young man that you didn't have to worry about prices going down because you were never wrong. And just for context, I was asking Jim about my idea about trailing stop losses. And I said, when I decide something, truthfully, I'm only halfway in the door. I want to see how it goes before I step all the way in. And Jim said very confidently, and correct me if I'm wrong, Jim, but that was approximately 20 years ago. So you were a man in his mid-50s, and I was a man in his mid-20s. And you said, well, that's easy, Porter. I'm never wrong. And I just wonder, has anything changed about that? Have you grown more confident or less confident in your investment choices?
Well, I guess you were just a little too young. I was making a joke. I hope you understood that. I have made plenty of mistakes in my day. Let me tell you about my first wife. Oh, my God. I noticed how you use stop losses. Your whole organization does. And I'm very impressed. And some of the smartest people I know use stop losses, whatever number they use. I have never used stop losses. I frequently wish I had. And in fact, the more I read your stuff, the more I think, maybe I should start using stop losses. I don't have anything to lose much by using a stop loss, and it might help me a lot. So I am listening to what you write.
Jim, that's very kind, and I appreciate it. My follow-up question is about your commodity indexes, and we're well down the road. You were starting those when we first met, and we've now got 20 years almost of track record with those. Would you consider those a success, or would you consider those a mistake?
Well, I don't know how you define success. They've survived, so it means they've survived. If nothing else, they have been going down in recent years because commodities have been going down. As you know, it's an index. It's not as though somebody's managing it. It's like the S&P. If the S&P goes down, it goes down because the market goes down, and vice versa. Indexes are always more successful in bull markets because nobody likes to buy a bear market, as you very, very well know. So in the sense that they've gone down, no, people have not made money, including me, in those indexes in that period in the recent years. On the other hand, I will say that if you do your homework, which very few people bother to do, you will find that my indexes have outperformed the other indexes on the upside and the downside. And I will modestly tell you it's because they're better constructed and better thought out.
Okay.
But who cares? They're still down.
So
they're down less than other people.
So I and you know, and listen, I ask this, and sincerely in the interest of learning. When I came into finance, and when I studied finance, and I looked at all the historical records, and I looked at what you had done, I you know, I'm not saying that I studied everything, because that's impossible, but I studied a lot. And it occurred to me that commodities are a really hard way to make money over the long term, because in real terms, their prices go down. Whereas corporations, although individual corporations fail, you know, the indexes of corporations do well over time. And I always wondered about the decision you made to put your reputation and your name on an index of commodities. And so I just want to ask you straight up, would you rather have your money, if you had to invest all of your money in one type of asset, would you pick corporations or would you pick commodities?
Well, I mean, the way you ask the question, my answer is commodities. But the reason I say that is because when you say corporations, yeah, if I could pick the right corporation, if I had bought, you know, there's only one stock, only one company in the Dow Jones Industrial Averages that had been there from the beginning. That's General Electric. None of the rest of them are still there. So if I had bought the stocks in the Dow Jones 100 years ago, 125 years ago, I might not have any money at all, or very little money, unless it was all in General Electric. So when you say corporations, which corporation? And tell me which one, Porter, and I'll put all my money there tomorrow afternoon.
I bought Amazon in 1997 at $3, but I didn't tell you that when I met you in 1998, so it doesn't count.
Well, you see, I should have been paying better attention. You should have, too. You should have put all your money in Amazon, not gone into business, gone to the beach, and just watched your Amazon.
Well,
so
you know
how smart you are.
What I did was I sold it all after it tripled for spring break in 1998, and I took my girlfriend to the beach in Key West. Most expensive trip I've ever taken.
Well, back to my point, just briefly. You know, the S&P 500. You can't buy the S&P 500. You have to buy at least historically. You have to buy the stocks. And if you bought the stocks, many of them would have disappeared. The S&P has survived, but that's because they drop out the losers. If something goes bankrupt, they just kick it out. So the average, the S&P index, has done well over the last nearly 100 years, 90 years or so. But that's not quite the real story, because many, many companies have disappeared, gone bankrupt, et cetera, and they get replaced. So the S&P has done well. But when you say corporation, which corporation? Tell me the corporations, and I'll say corporations in a minute.
Okay. I really do appreciate.
Just very briefly.
Yeah.
Cotton has not disappeared.
No,
Cotton
it hasn't.
Still there.
Cotton is still there. Jim, I really appreciate how generous you've been with your time today, and always with me. It makes me feel wonderful just to know that I have your friendship and respect, and I appreciate it very much. I've got one last question for you, and I know you've got better things to do today in Singapore than answering my dumb questions. But I wonder, have you heard anything yet over there about the possibility of a debt jubilee in America or in Japan?
The possibility. Well, first of all, that word means, of course, anything could happen. And there's always some wacko somewhere saying anything can happen. Somebody right now is saying the sun's not going to come up tomorrow. And the sun's not going to rise in the east. Could happen, unlikely. So, yes, you do hear those things a bit. But I know, to answer your question, I haven't heard a lot of serious talk about it anywhere in Asia. I occasionally see it mentioned somewhere in a publication or something. It's more likely to be something that would happen in the West or in Japan rather than Asia, because most Asians are still creditors, or even if they have debt, they don't have massive debt. You know, the Japanese are staggering with their debt. America is the largest debtor nation in the world and getting higher and higher. So if it's going to happen, it's going to be a place like that. But Porter, the implications are pretty staggering.
Yes, they are.
If there's no debt. I mean, if you're a pensioner,
you're out of
luck.
luck.
What do you do?
Yeah, you're screwed.
You're out of luck. You're dead. I mean, you're bankrupt. You're starving.
Do you, Jim? Sorry to interrupt, but do you know?